Get into character. LOP, yeah. Yeah, I did. I did. Was FES set up? Oh, it was an FL. Okay. That's awesome. Yeah, I didn't see y'all talking about it after after we went live. All right, let's get started. Lord Wonder Day is Thursday, November 16th, 2023. This is the week in charts. Obviously, I want to thank all you guys and girls for attending. If you're on YouTube, we're doing this live on GoToWebinar, but I am keeping a loose eye on the YouTube feed. So if you do have questions there, feel free to ask them. And obviously, I want to thank all you guys for attending tonight, both in GoToWebinar and in YouTube. So what we talk about? Well, it's kind of going to be like a same as it ever was type of show. Obviously, current market conditions, your questions on trading, your favorite stock, and crypto picks. And hopefully, I'd like to see more crypto picks showing up, especially since crypto's been on a tear as of late. I'll get to that in just 1 second. So we're going to focus on charts in a chart show, part two. What a concept. The TFM system, 10% system, to my amazement, we could actually have a buy soon. And the P's, soon being tomorrow. And I don't see, unless the market comes unglued, God forbid, I think we'll have a buy tomorrow. Crypto is still hot. Just buy stuff that's going up. And I'm going to walk you through that in a minute. And we'll look at the live charts and we'll see if there's something that's worth buying right about now. Q&A, of course, and your favorite stock and crypto picks. Hold off on your stock picks until we get to the live charts, and then just put them in one at a time. And that way I know which ones have been covered and which ones have not. And that's for your benefit. One other thing I want to revisit is crypto mining from the shitcoins, and that'll make a lot of sense in a few minutes. It's kind of an experiment. It goes a little bit against what I believe in, and I'll flesh that out, and I'll get your opinion on it, see what you think about it too, by the way. That was a disclaimer screen. As you know, you can lose money trading, or as I'll have to sum it up, all predictions are about the future, and a lot of stuff coming between now and then. He actually said a lot of shit. I guess since I demonetized, it doesn't matter, right? All right, let's talk about the mystery charts and the methodology in action. And the reason I wanted to bring this up again this week is last week I said I had a mystery chart for you. That was not a mystery chart, and at the last minute, I must have not saved my slide. So it was CEIX, and it's actually still set up. So it had made this big thrust down from all-time highs. Now, remember, everything that I do has a psychological backing to it, or psychological reason behind it. There's no mumbo jumbo. It's like a TKO is a good way of explaining the psychology behind a pattern. You basically have people getting knocked out of the market, or you get shorts, and you get shorts getting attracted to it because it looks like it's failing. And then when it turns around, you take advantage of the predicament of those players. So again, everything I do is psychological. With something like this coming off all-time highs, everybody is happy at all-time highs. As the stock begins to drop, more and more people become unhappy. And all you have to do, let's say 90 round numbers, anything above 90, if anybody who bought prior to September, or anybody who bought, I should say, from September on, is now at a loss, and they might be looking to bail out. Now, people don't always sell stocks on the way down. A lot of times they'll wait for them to bounce up a little bit and then sell, and then that's where the setup kind of plays out. By the way, I want to tail into some kind of cough that everybody in my town has. So if I have a coughing fit halfway through, excuse me. There's nobody else here to contaminate in my office, so don't worry about that. Anyway, this is what I call a first thrust down. It's probably also a bow tie. I was looking at bow ties earlier. They're a little sloppy on this one. It's not a perfect bow tie, but it's an obvious first thrust down. It's also, if you're into classical technical analysis, kind of a bigger picture topping pattern, kind of cup and handle type looking type of setup. Anyway, the entry was here. I'll show you the spreadsheet in just 1 second. Entry was here. The stop is up here, and initial profit target is down here. And so far, it hasn't really worked out, but I haven't given up on it yet. Number one reason is because the stop hasn't been hit. And It took me a long time to learn how to follow my plan. In fact, I think doing the trading service, which I've been doing for 20 something years, I think I've been doing it for a long time, has forced me to follow my plan, at least when it comes to the core methodology. I'm not saying that I'm not saying I'm perfect everywhere, but for the most part, because I put that plan out publicly, I seek to follow it the best I can. And here's the spreadsheet from that day. This stock was set up from November 2nd on. It triggered, I believe, on the 7th of November. And the portfolio looks a lot like that today. In fact, it's LFMD. We're long these two. Both of these two hit the additional profit targets. Thank goodness. And then CEIX, we're waiting for that one to hit the IPT. All right, let's hop into some charts. Now, I want to do an update on the TFM 10% system. Let me just blow through this real quick. These zone charts were created after being inspired by one of my clients, Jeff. Are you in here tonight? And Jeff pointed out that once a market drops 5% or more away from that 50-week closing high, it tends to be in trouble, and you might want to think about getting out of the way. Now, like I said in the final bar yesterday with Dave Keller, you might get a little more whipsaw if you're getting out at 5%, or a lot more whipsaw, but it's always a trade-off. We've got a guy in the Facebook group, and he looks at hourly charts, and he'll look at like an hourly bow tie and things like that, and he'll get out of the market when those hourly signals start triggering. Now, he's going to be the first guy out of the market, but he's also going to get a lot of whipsaw. So he might have to get back in, but he seems to be okay with that. But anyway, this system's based on a 50-week closing high and a 50-week simple moving average. It really can't get much more simpler. But anyway, as Jeff pointed out, when you're 5% or more away from that 50-week closing high, the market is generally in pretty good shape. And we can look at some longer term charts if time allows and kind of flesh that out a little bit. But that's what I would call the good zone. Once I put these zone charts on here, it becomes really easy to see, obviously. So we're within 5%. When you're in green, I should say, you're within 5% of the 50-week closing high. And then caution would be more than 5%, 5% or more away from that 50-week closing high. And then, of course, the no bueno would be once you're 10% or more away from that 50-week closing high. And that's where bad things tend to happen. Sometimes markets can drop as much as 50% or more, even 80% if you go all the way back to the recession, not the recession, depression in the 20s. So it's kind of scary stuff. Pick your favorite momentum indicator or moving average or whatever you want to use. But when you start seeing that momentum deteriorate, or even the net price movement, like we're using here, 10% away from that 50-week closing high, the market tends to be in trouble. And bad things tend to happen. Not all the time, but sometimes. And I'll have the spreadsheet. I'll just throw it up for a second. I don't want to bore you, but I'll throw it up. And if you guys want to take a screenshot or whatever, that's obviously perfectly okay. So we're now going off of this 50-week closing high. So this market went down for nearly a year, and it finally began to rally and made a 50-week closing high. And as you know, it sold off. Now, somebody texted me, and I think I mentioned this last week. I just want to mention it again because I think it's worth mentioning, especially since it looks like we're going to get a whipsaw signal. But somebody said, Dave, it looks like we'll get a sell signal. Should I wait to see if it follows through to the downside? And that was right around this sell signal here. And my answer was no, because 1987 comes to mind. In 1987, the market triggered a TFM 10% sell signal on a Friday, and on a Monday it crashed. So it crashed over the weekend. So there was a part of me that was thinking, okay, Dave, don't get out of the way. And by the way, individual stock positions, if you go in and watch last week's show, you'll see that we do see each position to its fruition, meaning that we have a stop in place. And even if the market begins to tank, we're not going to exit until and unless that stop is hit. Excuse me. I told you. Hang in there, Dave. You can do it. Anyway, so I explained this to him and said that you have to take all signals seriously, and that's almost line from line from Greg Morris, because you never know which one's going to be the big one, Elizabeth implied. Now, what's interesting is we could, like I said, we could get a sell signal. Now, let me just show you, I'm sorry, a buy signal. Now, let's just take a look at the recent sell, and then I'll show you the buy that will probably trigger tomorrow unless the whole world comes apart. And by the way, if the whole world does come apart, even though it's still technically, there's a 99% chance that it'll still be a valid signal, I would not take it if we have like a meltdown tomorrow, because I would wait for upside follow through. Now, it's kind of just the same, just the opposite, I should say, on the short side. On the long side, you could wait for a little bit more confirmation. That's why I put in a whipsaw filter of the 2 bars of upside Landry light, meaning that you need 2 lows greater than 50-week simple moving average. So last week, obviously, we had bar 1. And this week, so far, so good, we now have bar 2. And I can't imagine that this thing would go all the way back down and get below the, or even touch the 50-week simple moving average. But yeah, you know what? Anything can happen in the markets. And the longer I've been doing this, the more I believe that. So you can see we have bar 1, bar 2. So going into tomorrow, we're actually going to have a buy. So this has turned into the mother of all whipsaw signals. But I'm not too upset about it, because like Greg says, you have to take all signals seriously, number one. And number two, as he also says, whipsaws are frustrating, bear markets are devastating. You can survive frustration. Now, personally, and this is where I have to believe in what I see and not in what I believe, and this is why a system like this is a good thing. I think I grabbed the wrong jacket. Do I look like I'm in a big man suit? Anyway, I lost my train of thought. But anyway, we could have a signal tomorrow, and I might be a little less excited to take it just because of what's going on in the markets, not what's going on in the world. The best time for a bull market is when everything is coming unglued, okay? Your best bull markets are going to be when there's wars and all kinds of crazy stuff happening, pandemics, and all, you know, you get a bull market come out of the pandemic and the market goes straight up. So that's when you have, typically you have your best bull markets, when the news is just absolutely horrible. When everything's rosy, that's usually when the bull market comes in. Yeah, not to want to chart a time on that, but I think I know where I was going with this. On a personal level, I just think the market is so overbought so fast, and there's still a lot of areas out there that are in a lot of trouble, and a lot of individual areas obviously are super overbought too, and I'll flesh that out when we get to live charts. So that in the back of my mind doesn't have me too excited about taking the signal, but we'll just have to wait and see. If we have some weakness on Friday, maybe I'll wait till next week and see if we get some follow through. I'd like to see this market correct from this overbought condition, which it can do in 2 ways. It can walk sideways, as I told my clients tonight. It can kind of walk it off by going sideways, or we can have a little bit deeper correction. Now, we did have a buy signal in the Qs, and for S&Gs, I bought 100 shares just to see if I could follow a mechanical system. Remember, I'm a discretionary trader. I do develop mechanical systems like this sometimes. If I don't feel like doing work, other work, I do research, provided, you know, if I'm not drawing into internet surfing or something stupid like that. But I'll do a little research, and that's where some of these mechanical systems come from. And I'm discretionary in my trading, or considered discretionary trader. I go through 2,000 charts a night, 2,000 blank charts with nothing on them, except the price bars, obviously. And I pick stocks from that to trade. But it is kind of fun, and I know you want to party with me, but it is kind of fun to come up with these systems like this and see what happens. And I thought in this particular case, it looked like it worked pretty good in the Qs, just kind of eyeballing things. So I thought it'd be fun to put on 100 shares, and I did. 319.49 was my entry. Now, right now, the current sell is at 333.70. So that's a long ways away. I'd have to give up about 50 points, round numbers, of open profit. And that's going to be hard for me to do, but I'm going to see if I can do it, see what happens. So at 385.95, where the Q's closed today, subtract my entry of 319.49, that's 66 points, 0.46 points of profits times 100 shares, only 100 shares, but it's starting to add up. Now it's $6,646 in this trade. If it stops out, I think I'll only make about $1,400, which that's going to be a pretty big drawdown. When I designed this system, and this is kind of, you do things on paper, so to speak, the map is not the territory. Once you actually get into the nitty gritty, you begin to learn a lot about how it works. Now, I'm not trying to make you a mechanical trader, nor will I become a mechanical trader. I don't think I will. But if you're newer to trading, it's probably better to do things in a little bit more mechanical fashion. Maybe trade some of my patterns like Landry light pullbacks, try to find the textbook setups and almost trade them in a textbook manner best you can. And I think would be much better off. So I'm going to try to see if I can follow this and see what happens. And I keep telling myself, Dave, it's only 100 shares, but $4,000 or $5,000 to give up that's substantial. It begins to add up after a while, right? Anyway, so far the Qs have been stronger than the Ps, like we talked a little bit about last week. And the Qs have not triggered a sell signal. You can see they came pretty close to this 10% line down here, okay? And that's based on this 50-week closing high. But they didn't get below it, and they didn't get below the 50-week moving average. Now, I'm glad to see this moving average is playing catch up really quickly because we're dropping off low prices. I can't do it on the fly, but somewhere back here, 50 bars back here, we're dropping off some of these prices and we're adding in much higher prices. So that's going to help this moving average to really catch up. Now, it is a simple moving average, so it's a little slower to catch up. By the way, I think an exponential moving average is like 90%. Anybody can confirm this on the fly. I'll have to do a search if not. But I think the current, like an exponential moving average is like 95% or 85% of the current price, and that's why it catches up the price so quickly. Also, as I say quite often, one thing cool about an exponential moving average, and I don't know, you want to partner with me, is that as soon as price crosses below it, closes below it, the moving average will turn down. As soon as price crosses above it, the moving average will turn up. That works with a 10-day, a 100-day, a 1,000-day, a million-day, no matter what moving average you use, it'll turn up or turn down when price crosses it, which I think is pretty cool. Anyway, there's a spreadsheet. You can't see the depression in here, but I think it's like 80% diaper change. The diaper change is what happens after you exit. So you can see in here, there's been some minor sell-offs afterwards, which would be considered a whipsaw for all intents and purposes. But every now and then, the market loses at least half of its value or close to it after it loses 10%. So I can't do the math in my head that quick. So 10% plus 50 is not necessarily 60% because the numbers diminish. It's like the NASDAQ in 2000 lost half of its value, then it lost half of its value again. I know, it's kind of crazy to think about that. But you can see it here if you look at some of these numbers, lots of 20s, a few 30s, some 40s, some 50s, and I think 180 or something like that. So that was the whole, by the way, designer's intent. Whenever you're looking at somebody else's stuff, before you think about doing it yourself, make sure you wrap your head completely around his or her thought process to make sure you understand what they're doing. So this system was basically made to get you out of trouble, to get you out of way. He who fights and runs away lives to fight another day. That's an old hedge fund adage. At least the guy I work with for 14 years said it every day, every time we get stopped on something. Anyway, this tweet said that since 1982, 60% of the signals were followed by a drop of 10% or more. Well, this system doesn't look like we're going to have that 10% or more loss from the last sell signal. So because we're going to have a buy signal so quickly. But there's a 60% chance, and I went back all the way to the early 1900s, or at least 1920 something, or 1918. I forget when, but as far back as the data go. And what he's saying is true, or holds true, I should say. It's like 58% or 59%, something somewhere in there, close, approximately 60%. 10% loss and a 50% loss is 55%. Okay, gotcha. Good point. Yeah, so this is why I did the diaper change like I did it. And by the way, I stole that term from Ian McActivey. God rest his soul. He was an awesome guy. Often joke, he was my canary in the coal mine. I don't smoke cigarettes, but he smoked cigarettes, and he didn't drink a lot of beer, but he drank beer and he ate. He liked to eat. He was kind of my canary in the coal mine. And God, when he went, it's like, man, I better get to the gym, back off the beer or something. Jeez. Anyway, so that's where I got the term diaper change. He used to give these wonderful presentations, and that was one of the terms he would talk about. All right. Last week, just want to show you real quick. We talked about the VIX, and the VIX only matters when it matters. When it gets really stretched to the downside, the market tends to correct or sell off. And when it gets really stretched to the upside, the market tends to rally, because everybody kind of gets in panic mode, and then the market begins to rally. And the VIX is I don't want to go down this rabbit hole, but it's a 30-day hypothetical at the money OEX 100 options, puts and calls. And a lot of people don't understand that it's both puts and calls. And if you know a little bit about options, it's put call parity, so they probably could use one option or the other. But anyway, the measurement of the implied volatility, what the options market is implying, is telling. And if the options market is very low, it suggests that stocks, that people have become complacent. And if it's very high, it suggests people are panicked. And it only matters when it matters. And sometimes it just doesn't work. So we might have a situation here where we got stretched away from the moving average. We're about 25% or more away from the moving average. And we really didn't see a whole lot of correction. The market actually began to take off. And we're not really that stretched anymore because the moving average has come down to meet price. As I say quite often whenever I talk about the VIX doesn't work on fixed levels. And I think I said this last week. But years and years ago, long before I met Larry, he had a system, Larry Connors. He had a system that was based on the VIX being above or below 15, I believe. And I don't know how long that worked in back testing, but if you've ever built systems, a lot of times they don't work in real time, you'll find out. Unless you go with something super simple that's kind of mediocre. I much would rather a simple mediocre system, which the TFM 10% system is kind of a mediocre system, doesn't set the world on fire. But guess what? If you have a system that sets the world on fire, you have, congratulations, you have completely curve fit your system to the prior data. And your new data, it will look nothing a lot like that. You'll learn a lot in system testing. I was hired by a hedge fund to work with another hedge fund to do the technical analysis. And the guy thought he had this great system. And if the moving averages turned up, you would buy. If the moving averages turned down, you would sell. It was a little more complicated than that. But that was a big part of the system. And I discovered fairly early on, I kind of worked myself out of a job with this. I've done that several times in my career, and it's just the way I am. And I guess I could sleep at night because of it. But I kind of would, like, somebody else wanted to hire me to work with them so they could do options on the S&P, to where if the S&P went up, you'd make money, and if it went down, you wouldn't lose any money. And it didn't take me long to realize that the system wouldn't work, and evidently they must have found somebody else to do it. And I don't know how long they stayed in business, but they did go out of business. And I worked myself out of job way too quickly. I probably should have said, yeah, I think it has some merit. Pay me another few years and we'll figure it out. But anyway, my whole point there was just be careful when you're developing systems. But you can see the mean, the moving average. This is a 10-day simple. Is coming down to meet with price. So we've almost normalized on the VIX, which is a bit of a bummer because I was really, 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 really hoping to catch a huge intraday rout in the market. And truth be told, I've kind of violated my rules a little bit. I've been kind of fighting this trend a little bit intraday, thinking we're going to get that correction. So far, that correction hasn't come. So probably should have sat on my hands last few days and waited for a bona fide route lower. So lesson learned in this business, you learn a lot of lessons and you have to relearn them every now and then. All right, let's shift gears and talk about crypto. Now, a few years back, being the nerd I am, I looked into crypto mining. I was going to throw a few of these things in the garage for S&Gs, and the more I learned about it, the less I realized it's something I wanted to do. They are really noisy and they throw off a lot of heat, and so your cooling bill is going to go through the roof trying to cool these things. There's actually they've invented like they use like it's not mineral oil, but it's like a mineral oil, like a high-end mineral oil. And some of these things they actually soak them. They're actually submerged in the mineral oil to cool them, and they cool the mineral oil with all kinds of crazy coolers and all. So incredibly capitally intensive. And these things, I think I just grabbed this picture off eBay. And this particular one, I think, was like $69 for this miner. It's like, okay, well that'd be fun to play with, right? Well, if you plug that thing in, it's going to cost you $3 a day in electricity, okay? And it's not going to make anything. So by the time you might make a little bit over time, but you're guaranteed to lose $3, and that's like at 13 cents a kilowatt hour. And it gets worse if your electricity costs are worse. And then you got to factor in it's going to throw off some heat, like it's like having a little heater running. But anyway, it's not feasible for a small hobbyist to mine Bitcoin. Okay. Now, one thing I did notice, it might be somewhat feasible for these people that mine the altcoins, but somewhat's a keyword in that sentence because it's probably become very competitive. But one thing I noticed, the people that mine the altcoins, they wouldn't keep them in their native coin or token, whatever the case may be. They would convert those to Bitcoin to get paid. They get paid in Bitcoin. So one thing I was thinking about last year or 2 years ago, whenever I did this experiment, was instead of going through the trouble of trying to mine them, stay in my wheelhouse. And are the slides turning? Looks like the slides aren't turning. You'll see the yeah. Let me know if the slides are not turning. Let's see if it's on YouTube. Yeah, looks like it's on YouTube, so it's working. Okay. So anyway, I thought let's stay in my wheelhouse and trade these things, and I'll leave some of the profits in the native coin or native token, however you want to look at it. So I would mine them through trading, and it goes against what I really believe in because this does hint at buy and hold. But I would copy them over to a separate area, and I wanted to see what would happen. And I wish I'd have tracked it better, but just to let you know, it failed miserably. I think I had $600 left in all these coins, and that's after they came back tremendously. They were probably down about $300. And it's like every time I make a trade, I'd peel a little bit off. Instead of selling 100%, I'd peel off, I think in this case was 50% at the IPT of whatever that profit was, and then I'd put it aside. And my thinking was the next SHIB or something like that would come along and would take off. And I'm no longer of that mindset to try to capture that as kind of like a fun little experiment. But I did get to thinking to kind of think like these altcoin miners. What would happen if I traded these altcoins, or these shit coins as they call them, SHYT, and started putting like 25% of the initial profit target into Bitcoin, and possibly on maybe a big winner, a small percentage of that, maybe less than 25% of those profits, remaining profits, into Bitcoin too. And I know this kind of goes against the buy and hold, my anti-buy and hold mantra, but I'm just taking a small piece off of each one of these, a fairly small piece, and I'm kind of seeing it as like a frictional cost or commission type of cost, and I'm putting it over in Bitcoin. And there's only I've had probably about 8 or so far, so it's like a couple $100 have gone over to Bitcoin. And I just want to see what's going to happen longer term. And again, it goes against buy and hold. And I know that Bitcoin and any other asset out there will lose half of its value at some point in my lifetime. So right now we're talking nickels and dimes. If this thing gets to be a good problem to have, but if let's say it got to 50K or something like that, or 100K, then of course, then the trader in me would kick in, and I would put some sort of system to it to be in and out of the Bitcoin. But for now, I just thought it'd be kind of fun to see what happens. So that's what I'm up to there. The original mining experiment, I would say, failed miserably, but it was fun while it lasted. Now, Will Rogers once said, "You buy stocks that go up. If they don't go up, don't buy them." Well, you could actually do that, and I know he's being tongue in cheek, but you could actually do that in the shit coins when being the key word in that sentence, they're moving. And right now is one of those times. Now, don't bet the farm. I'm going to show you a bunch of examples here of recent trades, and I'm only putting like $1,000 max into each one of these trades. I don't have my life savings and all this stuff. It's just a small amount that I'm playing around with. And it's a lot of fun, and it can be very, very, very lucrative. And I think, as I've said before a few years back, us trader types who've been around, slightly older guys, such as everyone here tonight, I think everybody here is fairly a little bit older, we have an unfair advantage because we know how markets work. We know that they work on emotions. We know that these things are all crap and they're stupid. And I see all these people out there poo-pooing them, but you can make a lot of money in a market that's irrational and stupid. I have no idea what these things do, okay? I look them up every now and then, and I'm like, I'm more confused afterwards. I understand a little bit here and there, but for the most part, they all kind of sound the same, and I don't see how one can be differentiated from the other. And maybe I need to be schooled on that, but then again, don't confuse the issue with facts. If it's going up, it's going up. Get out. Now, by the way, I did get out of one, and I forget which one it was, and I wish I'd have wrote it down. But there was one I was in, and it would just go up a little bit every day, about a 0.5%, 0.5%, 0.5%, 0.5%. And it seemed like, and that's how Bernie Madoff got caught, because he'd just go up a little bit, never really lose. You know, every now and then this thing would lose a tiny bit, but it never really lost much. It was the craziest thing ever. And you know, after 3 or 4 weeks in it, I'm like, man, I wish I'd have put a lot more money into this thing. And then I'm like, you know, I smell a rat. And then eventually it crashed because it was, I don't know how or what, but it was kind of manipulated. And if anybody knows or remembers that coin, let me know. Now, I put a little caveat in here last minute when most are going straight up. So right now, at least last week and week before, is one of those times where nearly everyone is going up. And as I've said before, without going into a lot of details, I've had some clients who've made a lot of money off my Landry list when the market is going straight up, like a 1999 or times like that, where the market's just blowing and going, and they're just staying in those top issues all day long based on relative strength sorts, not relative strength indicator, but where they are relative percentage-wise to the other stocks. So they stay in the top issues all day long and then flip out of them when they start dropping down. And I'm doing something very similar in Bitcoin. I'm sorry, in like the old people, everything's a Bitcoin in the shit coins. So this was one from last week. The entry was here. And again, you can see nickel and dime stuff, right? I'm not going overboard with this. I had an offshore account where I had a little more money in it, but the United States cracked down on and I pay my taxes, believe me. But they cracked down on the crypto, and that kind of wiped out me using that. Which was it was great because they had every coin in the world, and you could go to like crypto.com's website, and one of you guys might have been John Z showed me this. It's like you somewhere on there, and I can get you the link. You could click and it shows you the top moving pairs. And every now and then I'll look at that and then I'll get something off that. I'll keep it on one of the monitors every now and then just to see what's moving. And it's really cool. And back when KuCoin was still when you could use it from the United States, a lot of times you could just look at the coins going by, or tokens, whatever you call them, and just try to stay at the biggest gainers. So anyway, in this particular one, we hit the IPT. So the stop comes up to break even. And I just want to follow up on this. So it's moved a little further in our favor since, and I've moved my stop up a little bit more on that one. But it hasn't set the world on fire just yet. But I'm letting it roll. Okay, free roll, as Charlie Kirk says. Charlie, I haven't heard an update in a while. I know he's doing a little bit better. It was very, very horrible accident. So I'll put a link for the GoFundMe in post. So check that out. Anyway, one thing that I do just to keep life easy, because these things are so damn volatile, I haven't done a lot of calculations on where my IPT should be. I just found that using 20% is a good round number. So as soon as I get in, and I have made a mistake in the past, and I'm going to show you why you must do this. And I get a little lazy every now and then, or I get pulled in 15 different directions, or my ADD just kicks in, whatever. And I don't put those orders in. So you have to put those limit orders in as soon as you place the trade, as soon as you trigger the trade. So I'll put in a limit order at 120% of the entry, just 1.2. So if you're buying one of these things at $1 times 1.2, $1.20, flip out half, get your stop to break even, sit back and enjoy the ride. Now, I talked about this one last week, and one thing that I'd forgotten about doing, because it's been a while since I was super active in these things, and now I'm getting super active again. But one of the things that I've forgotten about doing was putting a alert to alert me when it's moving and getting close or fairly close to that IPT. So that was my lesson last week with this ILV, because when I looked at it, it's like, oh, it looks like I hit the IPT. I got all excited. I put these IPTs. This is TradingView. You could use ACP, has quite a few altcoins. Right now, TradingView seems to have the most, but they are adding more and more in ACP. They look at the volume, I think, a little harder in ACP, and they don't just put the crappy ones, low volume ones. But anyway, so I was kind of bummed out thinking that I missed the IPT, but fortunately the following day you can see it did hit that IPT, and then now my stop is to break even. You can see, so 20% would be a $200 profit, and we're taking half of that. So you can see $600, so that's looks like $95 profit in this particular case. There's a little commission in there, maybe some slippage. So, and maybe I'm off by a fraction on these things, but you kind of get the idea. Now in this particular case, or any case for that matter, once you hit the IPT, the entry becomes a stop. Looks like it came dangerously close to stopping me out, but so far so good, knock on wood on that one. Now here's a new one, and it hit the IPT last week. And all I'm doing, and I'm going to do an RS sort here or percent change sort and show you in a few minutes, and we'll see if we can find any live. But all I'm doing is going through my list and like, okay, what's up the most? And I'm also buying, and I hate to use the word candle, but I use candles with this particular program just because it makes it easy to see. But it has to be fairly liquid in that you don't have a bunch of long tails. And again, it'll make more sense in the live charts. And ideally, you want to buy into new highs. You want to buy some of the strongest pairs. And it has to be at the top of the candle when you buy. So let's say that this was really strong when you come in here and it's like, you see how it's tailed off. So that would not be a buy. When I bought this one, it was at the top of the candle, and you can see it went a little further by the end of the day. So again, this one hit the IPT, and then now the stop is to break even, and I need to go ahead and bring that up a little more. I don't know if it's that high. That might be an exaggeration. But as it moves more and more in my favor, I begin to trail that stop higher. And the idea is to try to stay with it as long as possible. The same exact thing we're doing with stocks. And this is where we have an unfair advantage if you want to take advantage of it in these altcoins or any market that moves. Now, this one earlier, and again, I'm going to admit some guilt here. I did not put it, I don't have alarms set on these things, alerts. I need to put alerts near my profit targets. But when I saw this, I thought, as we say in Fargo, oh, geez, that's not exactly what I said. But anyway, this thing came super close to my IPT. And this is a 5-minute chart. And it did not hit it. And I'm like, man, that is a bummer. But when I checked my brokerage account, I saw that it did hit it. So my green line must have been a little bit off in here. Now, sometimes I will say, even if this green line is perfect, sometimes they can trade through it and you still won't get a trigger. And I'm sure everybody's experienced this at one point or time in their life. And that's because other people had orders in ahead of you. They got filled ahead of you, and there was no more supply left or whatever. No more demand, I should say, at that point. But if you zoom it in, it got really close to that IPT. Well, it actually hit the IPT. So in that particular case, it actually worked out. Okay, let me shift gears here, and we'll go to the altcoins. And just give me 1 second. Now, if you guys want to talk about, in fact, you could any individual stocks, and I'll check YouTube first chance. We could bring up any individual stocks now, or if you want to bring up some altcoins. All right, here we go. Okay, so the ones in red, I'm long. The ones in blue, I was considering recently, and the ones in green, I have free rolled on. So here's that AXL. Wow, look at that spike. That's crazy. So this thing spiked even more. Here's flow. And you can see that's, I don't know where my stop is now, but it should be a lot higher than it is. This is ILV. And this one probably like right here. I think I have the actual trade in the slide. So if you rewind, you can check that out. Here's Rune. Every time I trade this, I'm like, I hope it doesn't ruin my account. Sound like a friend of mine. I have a friend that sounds like crossbreed Ross Perot and a redneck. David, why y'all make fun of me? Anyway, you can see that we hit the IPT and then we'll trail this stop higher, and we'll see how long we can ride out this trend. This one has gone straight up. And my entry was way down here, okay? So again, I buy at the top of the candle, and I'm looking at the strongest pairs. Now, once the market settles down, and once all this crypto begins to correct, then we're going to go back, I say I, and I guess you too, we'll go back to the core methodology, and we'll look for something like Landry, like pullbacks or something like that, okay? So again, there's Tia. That's been on a pretty good run. This is one of my biggest ones. I don't have a big position here, unfortunately. And then here's some ones in blue that I've been flagging lately. And you can see some of these are becoming more of normal type of core methodology pullbacks, okay? Which is fine. And longer term, that's a probably a more viable way to trade. But when these things are going straight up, you could just buy them as they're going straight up. Now, don't bet the farm again. And there's been a few times in my short shitcoin trading career where I've parlayed so much money so fast where it does kind of get to my head to where it becomes real money after a while. It's kind of like the 100 shares of the Qs. Who gives a shit, right? Well, now it's $6,000 and I'm at watch evaporate, or at least 4,500 of that as it goes down to the stop. Should that occur, that's going to be a pretty hard thing to do. But, maybe a year from now I'll be up 100 points and all that stress won't matter. All right, so anyway, so these were some that I was thinking about. So all I'm doing here again, yeah, keep the questions coming. We'll get to all that. I'll be happy to. Excuse me. This one looks pretty good, by the way. Zen, maybe an entry above this high, and you can probably stop out down around a 30 EMA. And what would the profit target be? Well, 120% of your entry. So I just did a sort. Now, I don't know when they roll these things, which makes it kind of problematic if you're doing it. It doesn't really work for the weekend charts. So this one looks like it could be a little thin because you see these tails in here. That's kind of my first telltale sign. So you could actually look at the depth of the market before you trade. I actually can't pull up an option trade chain easily. We'll see. We'll see about that, John. But yeah, let me see if I could go with another screen, maybe. The problem is you're not going to get. The problem is you're not going to get a clean. I have it ready to go over there, so maybe I could do that. You're not going to get a clean quote after hours, but I'll take a look at it. We'll see. So you can see this one. It does have a lot of tails in it, so it might be thin. Let's see what else is happening. See, like this. This looks pretty good, okay? Now, here's where it's scary AF, all right? You're buying this thing up in this stratosphere, okay? But it's going up. It looks pretty good. So this would actually be a buy. Ideally, you want to catch these things going back a little further. But that would be a buy for me right around these new highs. It's at the top of its candle. So that one might be worth a shot. So let me just put that on my list. There's a T again. All right, so you guys kind of get the idea. Any individual. Oh, right click at TC. Oh, wow, just learned something here. Okay, that's cool. We'll do that. Wow, that's exciting. John just taught me something. John teaches me a lot. I'm worried he's going to start charging me. That's a great thing about the Facebook group. We learn a lot from each other. I learn a lot from you guys. But anyway, so that's the altcoins. Let me check YouTube real quick, see if there's any questions stacking up there, and then we'll shift gears and go to stocks. If I can find it. Oh, here we go. Nope, no questions. Okay. All right, we're going to shift gears. We'll switch over to stocks, and then I'll do that real quick, John, so we don't, and then we'll take a look at the markets. Okay, let's switch over to TC. So here's a portfolio, CEIX, KNF. KNF, we got in back here on this first deep retracement. Nice little IPO. Let me make sure that's actually being shown. And then is everybody seeing the charts? Should be. Yeah, fantastic. And there's LFMD right at these multi-year highs. Okay, CEIX. I got it right there. Okay. Yeah, remember I said it was probably a bow tie. It was a little bit of a sloppy bow tie. So let's look at the option chain. Yeah, I didn't know you could do this. Wow, look at that. All right. Let's see. Let's take a look at puts. Okay, I am long some puts on this one. And what I did was, and I'm actually short the stock now. When it started to break down a couple days ago, um, I actually shorted it outright just to establish a position. But what I did was, I think about the 92.5s, they were a little out of the money, and they're pretty much worthless right now. So that's money pissed away, so to speak. But I was able to get a chip in a chair, so to speak, and the stock has rallied enough to where I would have lost the same amount of money in the stock. And I know it's apples and oranges or whatever. But yeah, I didn't realize these options were thin, but this thin, but it's okay because you could, I always use limit orders to get in, and I'm counting on these things to, I hate to use the word hope, but hopefully go intrinsic. And once something is intrinsic, the arbitrage alone will let you out, okay? So the stock itself is fairly liquid, 500,000 on average so I wouldn't worry so much. And again, I'm not an options expert, okay? The 14 years I spent in the hedge fund was as an analyst for the market, not for an analyst for the options, although I did chime in every now and then with a good idea on the options. But for the most part, I was the analyst and not the options guy. But yeah, I have the 92.5s, which are pretty much worthless in here, as you can see. So what's the question, John? Is there, you have $100 puts in CEIX? Yeah, that's probably a pretty good strike. Are they expiring tomorrow? Yeah, so at $100, where's your intrinsic on here? You're roughly $2 intrinsic. Yeah, the idea with the puts as a substitution for stock is you want to go deeper in the money to get the delta. But when I put the position on, I figured the 92.5, the entry was like 92 or something on this stock. I figured this would be worth a shot just to get me in the market and not have to put up all that margin and then risk all that money. I just felt like this was the way to go. But yeah, it's failed miserably so far. And then you end up with another problem. Eventually, it's like, well, now you have to establish your position. So I established my position yesterday, I believe, and then so it's at a little bit higher level than the normal entry. So it's probably all a wash in the end. If the stock works out with the outright, then it was money thrown down the drain, I guess, on this stuff. But I was able to sleep at night for the last week or so, just knowing that I'd had $400 worth of options versus $20,000 worth of stock out there, and then have something crazy like the market melt up or the company get bought out or whatever. So yeah, I'm not sure I'm answering your questions on those options. Maybe we can look at them. If you remind me during the day on Facebook, I'll be happy to pull them up while they're moving, and we can see what's happening. So let's do that. But thanks for the tip on the TC. I also took TDW from the Landry list. Yeah, TDW looks pretty good, or did look pretty good. Looks pretty bad. Depends on how you want to look at it. But this was a first thrust and a bow tie. It was on the Landry list. It's got a lot of support down below, and maybe I'm too much of a purist, and maybe that might be a good problem to have. But I like things to be able to just kind of move and just not have to worry about any trouble. In hindsight, yeah, it's pretty far down there. Maybe I could have gone after this one, but I'm glad you did, Jeff. And that's kind of why I put them on the Landry list for people who want to do these things. So Jeff did a bear call spread. Can you give me strikes on that? I'm just kind of curious how you did that. I do a ratio spread every now and then, not in stocks, but in the zero DTE with the XSP, and I haven't become super successful at it just yet by any stretch of the imagination. So that's why I'm not trying to teach you how to do that. I got to figure it out myself. My very first attempt at puts was this, but I pissed away $100. Yeah, and then it depends on how deep you go in the money, and I did some webinars on that a while back. But if you're not that deep in the money, a lot of times you could just flip out at a double. Okay. But yeah, I did buy options on that, and it did fail miserably. So don't feel bad because your first option trade failed miserably. Yeah, so we were talking before we got started. ATGL. This was an IPO. Oh my God. Oh, why'd you make me pull that up? Oh man. Shit. Oh, the market is so perverse. This thing it had its issues, and the buy at B would have been right here. And my buddy John, he got it. Good for you, John. Wow. Wow. You know, and in hindsight, NLOP I think came afterwards. In hindsight, I had some issues with NLOP, and I only went with a couple hundred shares here and there. I think I have 400 shares total. No big deal. Because if this thing took off without me, I would be aggravated. But look at that! Oh my God! Have you taken some partial profits? Obviously on this. Whew. Geez, that's amazing. Boy, 1,000 shares on that. That's $20,000 at least. That's crazy. Jeez. That'll make a year, right? Good job, man. So John said it was an FES setup. So John liked it. I found the volume was a little low. In hindsight, I'm going to absolutely love it, right? But you can see, so that would have been your buy right there because, nope, bar one won the high for the week. So actually, 1, 2, 3, 4. Wow, the buy would have been at 7. Where'd you get filled? You had a little bit of a spill in there, though. That would have been hard to hold through, but still. Oh, you're killing me, John. That's awesome. I'm excited for you. Wow. All right, let me cover the market real quick before I forget. And then if you guys want to talk about individual stocks, feel free to do so now. So my big concern, as I think I've said a few times, is that we're very overbought in here. We got very overbought, very over fast. Oh my God. Oh, that sickens me. He got in at 7.11. We were talking about this in Facebook. God. Well, congratulations. Wow. All right. Next time you're in town, if you come in town, if you come in town, I should say, you're buying the beer. Oh, goodness gracious. Okay, so this thing kind of melted up in here. The S&P 500. That's a pretty impressive run from here to here. What's that? Round numbers, about 10%. Market doesn't go 10% that fast, as you probably know. So it's very overbought. I would become very concerned if we close this gap in here. Let's take a look at the spider. So you got a true gap. We close this gap, I'd be very concerned. Again, to walk off this overbought condition, it would have to kind of hang around these levels and go sideways. I can't stop thinking about that stock. You know, I don't know why I didn't do like an S&G trade, just like a couple hundred shares here, a couple hundred shares there. Oh man, good job. I'm going to pick that one apart. And you know, one reason I didn't like it is I found that a lot of times when the IPOs go like below 5, they don't tend to work as well. It seems like there's a sweet spot where you need them high single digits, but less than $30. But wow, that's crazy. Good job. I'm excited for you. I really am. So NASDAQ Composite, same sort of action there. It's kind of melted up in here. And as I preach, by the time the market gets all the way back to its old highs, it's already so overbought. It just can't keep on keeping on. I'm thinking Energies did that recently or some other area. See, energy's kind of, it's not the best example in the world, but it's a pretty good example. You can see they kind of went straight up in here, and then they stalled out. They just couldn't sustain it. So it's very hard for, what's the old saying? Trees don't grow to the sky unless it's an ATGL tree. Damn it. The Rusty is just miserable. I got creamed everywhere else, but I did make a little money on SRTY today. But you can see that it has this big gap in here, and then today it began to implode a little bit, and it's just all over the place longer term, as you can see. So just plain old ugly on the Rusty. Energies, getting back to energies. Energies look like a top, remains in place there. You can see that, again, they shot higher. They overshot that prior high in here. That's kind of not unorthodox, but that's a lot of times double tops do that. Okay, you have a top and it gets overshot by another one and it's rolled over. All right, I had to delete all the text because I keep looking at that ATGL and kicking myself in the butt. And here's the thing. I was looking at it at 12 yesterday, and I'm like, David, buy a couple hundred shares just for S&Gs. And I'm like, nope, that was not part of the plan. Anyway, energies look toppy. We could see some shorts here fairly soon. The only problem we're running into, like the Tidewater, of course, that's a good problem to have, I guess, in that case, is they have a lot of support below them. And you can see they're kind of all over the place, so it's hard to find good structure in the individual market. A lot of areas still remain in downtrend. There's durables only pulling back so far, but some areas obviously have been improving significantly as of late. But again, they're becoming very overbought very quick. There's financials. You can see very overbought very quick. Insurance banged out new highs today. Maybe we'll see some setups here fairly soon on follow through. Drugs getting back to the downside. They so far just pulled back a little, still look like they're in trouble. Biotechnology selling off a little today, getting hit fairly hard, remains in a downtrend. So far just pulled back a little bit, a little choppy lately, but not really participating in a meaningful way. Defense has shot higher, but it ran into all this overhead supply, and this, I think, could be a problem. For me to get excited, it would have to take out the prior highs and keep on going. M&C, here's another one of those areas, is a great example of overbought, okay? And overbought could always become more overbought, and overbought, it's like, as I often preach, damned if you do, damned if you don't. If you buy overbought, then it corrects down, okay? If you don't buy it, then it just keeps going higher. It's kind of like a buy it B in ATGL. If you don't buy it, it never goes up. Anyway, retail is none of those areas that just shot all the way back to their prior highs and then began to come in a little bit. So this is kind of not a harbinger, but kind of like an example of what could happen when you get a super overbought market. Just absolutely imploded today. Let's take a look at a couple more areas real quick. Transports had a decent rally. So far, I'd say they're in a downtrend, just to pull back. But the team, one day at a time. Software, brand new highs, a little overbought though, but let's see if we can follow through to the upside. If we can pull away from these peaks in here, I think we're just off of all-time highs. Yeah, if we can make all-time highs and then pull back, then I'll become a bull there. Semiconductors, nice little run higher, but I'm from Missouri when it comes to stocks. It's more of a show me thing. I'd like to see it make these multi-year highs, and while we're wishing, I guess, all-time highs, and then let's see what happens there. Now, obviously, if I see the mother of all setups in one of these sectors, I will take it, but we're just taking a look at the overall sectors. There's the Qs, as you know. Again, Qs are doing pretty good, but very, very, very overbought in here. Looks like my measly 100 shares, we're going to have a little bit of a drawdown on that, likely. SMH, which is the semiconductors, actually did close at all-time highs today. So this is kind of interesting. But again, it just went straight up. It's super overbought. I doubt that this is going to be sustainable. But as I've learned quite often, the market can do whatever it wants. And even a stock you pass on could go up 22 points overnight. All right, any other questions? Any individual stocks? Let me see what's going on and YouTube. Last I checked. See what we have here. Nope, nothing there. I know we're all in Facebook together, so we don't get as many questions as we used to. By the way, if you want to join these live, DaveLandry.com/webinar. And I apologize to the YouTube people while we're getting all this worked out. But you can find me on YouTube at Dave Landry. You can watch live there, or you can register on my website at DaveLandry.com/webinar. Okay, going once, going twice. Well, obviously, I want to thank all you guys and girls for attending tonight. I appreciate you taking time out of your busy schedule to be here. Anything unanswered, Dave at DaveLandry.com. Dave at DaveLandry.com. I made it. My throat made it. Awesome. Congratulating myself. Everybody have a great weekend. Everybody have a great Thanksgiving, by the way, if you're in the States, and have a great Thursday if you're not. Enjoy your market holiday and a half, I guess. I'll see all you guys here, I think, everybody here tonight, and I'll see you tomorrow in Facebook. Everybody have a great weekend again, and see you in a couple of weeks. Thank you so much.